Investors and traders, welcome to the channel. Market chart pattern. Today is 18th of July 2024. I hope everyone is having a great day. We will be taking a look at the US stock market indices today. It's going to be a shorter video with more focus on the stock indices. We'll take a brief look at the bond markets and also the US dollar. So the markets have been pretty volatile today, but it shouldn't come as a surprise. And before we get into the details of it, as always, this video is for educational purposes only and it's not a financial advice. So if you had watched the video I did over the weekend in which we looked at the different market indices and also the market timing model, we had some timing coming in fact, we had the timing coming in around the 17th of July. So 15th of July to 17th of July was the kind of window for it, and with timing we have to give them a few days here and there. And what we have seen today is a fair amount of volatility come into the market, but this is what our timing model was forecasting in advance. And the subscribers to the channel can actually go watch the video. We were actually watching this time window. Now this window has got a little bit further to go, and the next two dates that I'm getting is 29th of July and followed by, excuse me, 26th of July, which is going to be a Friday, followed by 29th of July. And with the timing we have to give 2 to 3 trading days on either side. And then the bigger one comes around, towards the end of August. That's going to be the key dates to watch for the timing, and that window is between 29th of August 2024 and um, and the 3rd of September 2024. So that's what we are watching for now. Let's actually take a look at the NASDAQ. So here we go. This is the NASDAQ futures chart. This is the daily chart, and what we are looking at is that NASDAQ, after reaching our key target, which is on the weekly chart, here we go. So this is the level that we had been watching for quite a long time, many months in advance. And the market actually did this big ABCD, and right at the 1.618 expansion of the bear market, which is the BC swing. And we are seeing some volatility come into the market, which is kind of expected actually. But the key is this the start of something significant, or the market is acting normal? So the short answer is, to me, the market is actually acting pretty normal, although the moves are pretty sharp, which is expected because the market is at really elevated levels. Okay, so let's just have a quick look. When we had the correction take place in April, which also our timing model did a fantastic job for giving us the dates in advance. It was about 8.6% in the NASDAQ futures. Then we had a little bit of a pullback right here, and what we have done now is we have pulled back almost 5.82% from top to the bottom. Right? No, I'm not taking the closing into the equation here. So now the really important thing is, what did the market do? What has it done thus far? So what I do is I actually publish these standard deviation levels every week. So I highly encourage you to go and actually watch the video from last week. I will actually also put a link in the description and towards the end of this video. I did it in two parts. One was for bonds, the other one was more focused on the stock indices, and the standard deviation levels were given in that video. And what we were watching for was the -1, -2 standard deviation. And what the market has done thus far is actually it went right to the -2 standard deviation, and actually it went a little bit lower. However, towards the close, buying came into the market, and the market actually closed above our -2 standard deviation level. So here we go. So the -10 standard deviation per my calculations was coming around 19,830, 827 roughly. Some of my calculations for this are a little bit approximate, so these levels could be a little bit different for different people doing the calculations in a different way. Maybe they are using a different volatility index for NASDAQ in particular, so you can arrive at slightly different figures, but ballpark figures should be similar. So what we saw was market actually um, come right to the -2 standard deviation of the weekly levels, and then actually move a little bit lower but close above it. And also, if you look at it here, we have the 38.2% retracement of this swing low to this swing high coming around here as well, around 19,924. But the market actually went a couple of 100 points below that, and right to the -2 standard deviation level, and actually a little bit below, which is fine. So what I'm trying to say is that although the week is not over, we are really intensely watching this -2 standard deviation level, and whether we are going to get a follow through tomorrow, which is Friday. And there is a chance that this is all what we might just get, and the market, if it just closes above the -2 standard deviation level, then it's just a normal pullback in a bull market. And this 5.82 percent correction is probably what we might get, and then we'll start a new week. We'll have different new levels, so we'll be watching those levels. Thus far, to me, it is just a normal market, a pullback in a bull market. Now let's take a look at the ES contract. Here we go. This is the daily chart of S&P 500, and when we had this pullback right at the in the month of April, it was about on the futures chart roughly about 7%, and then we had a little bit of correction here, a pullback, and what we have done now is this pullback right here, which we had in late May, is now exactly equal in terms of magnitude. Percentage wise, quite similar. That pullback in late May was about -2.95%, and this one thus far has been -2.63%. Now, the other important thing to watch is that what did the market do for the S&P 500 E-mini. The market has actually gone right to the -1 standard deviation. Now, the S&P 500 E-mini is actually the market is stronger than the NASDAQ, which is absolutely fine because of all the pattern formations and rotation happening from tech stocks, the money going into different stocks such as small caps and Dow related stocks. So that's fine, but it's pretty normal. The market just pulled back right to the -1 standard deviation level. And also, let me see if I'm able to show it to you on the, yeah, there we go. So this is the hourly chart, this is intraday. What also the market did was, if we just do our one-to-one price projections, so that's gonna be the ABCD we talk about. There you go. So the market also completed a ABCD one-to-one price projection. So that's really interesting to watch as well, because we have a number of things coming together right here. We have the -1 standard deviation level. We have seen the late May correction in terms of the magnitude being equal, and also the ABCD. And then, of course, on the NASDAQ, the market actually hit that -2 standard deviation level. So it looks, in my perspective, a normal sort of a pullback. The week is not over yet, and we'll have to wait and see if there's going to be a follow through or not. And the chances are, where the market is at the moment, maybe we actually might. I believe there is some option expiry. Tomorrow is a Friday, tomorrow as well. So maybe the market might be fairly volatile, and towards the close of the day, we'll have to really watch, and maybe that's all we get in terms of a down move. So this is what we are watching in the stock indices. Just while we are at it, if we just take a look at the weekly chart, here we go. This market had also reached our the shorter term targets. There are, of course, higher ones as well. So thus far it's just pulling back on the weekly chart. Let's also take a look at the Dow Jones E-mini, and this is the Dow Jones E-mini, and here just on the weekly chart, we can see that these were some of the levels that we were watching. It went right to the 1.272 extension of this AB swing. So this the one which is mentioned in blue, was mentioned in blue, but actually it's red. Let me actually draw it like this now. So 1.272, we also have the 1.618 expansion nearby, so right into the zone where we could expect resistance to come in. But this index has been much stronger than the S&P 500 broader index, and also the NASDAQ 100 in particular. Right now we'll just move to the US Treasuries. Really quickly take a look at how the Treasuries did, and what we can see is on the shorter end 2 year, we have seen the yields move higher, or creep up higher a little bit, but because it closed below this trend line, we think that we are actually in an ABCD lower one-to-one price projection, and 3.9% is something which we can actually see a print on the 2 year Treasury note. Now, since the markets remain volatile, and these bigger indices are pulling back, the treasuries could the yields could actually move slightly higher. So it's possible that it tried to do a throwover of this trend line. Is possible. I will not bore you with the technicals. Let's take a look at the 30-year treasury futures. So here we go. Now this market is right in a zone where it has resistance right here from the structure, and just below the 61.8% retracement. So what we have seen is this market pulled back today, and the chances are it might actually continue to move lower a little bit. In other words, while we are in that timing window, we could see some higher yields come into the market as well. Okay, now TLT, here we go. Similar kind of a picture to the 30-year treasury note. Now let's take a final look at the dollar index, and then I think I'll just close the video. Here we go. So dollar bouncing from this possible support coming in from the 7th of June, but it looks pretty weak, and personally we think that we are in this ABCD lower shown in black, and we could actually go as low as 102.85, but of course it's finding some support from the structure right here, and if the markets remain volatile, then dollar could rally a little bit. The 38.2% retracement coming around 104.30, so that could be a possible target, where we also have the 200 period moving average as well. So this is what we are looking at. Markets, these major indices, NASDAQ and S&P 500, they pull back, dollar rises. This is a normal kind of expected behavior for the markets. So thank you very much for watching the video, and I hope I was able to explain what we had already discussed during the weekend video, and how these standard deviation levels that I put out every weekend, why they're so important to watch. And markets do tend to go, it might not happen every week. In fact, let me actually tell you the significance of the minus standard deviation levels in the past 18 months. It has only happened I believe 3 to 4 times, and the last time it happened was 19th of April, and that was the exact bottom for the market. The correction was over and the markets began to rally. Now we are in summer period, we are getting closer to the election as well. We could expect some volatility to come in. We have the timing for the model, but these levels we really need to watch really carefully now. So thank you very much, good luck, good trading, and if you found this video of educational value, give it a thumbs up. If you like our technical analysis, please do subscribe to the channel, and if you do, then please hit that bell icon button. That way you will know when the new videos are posted. Good luck, good trading, speak to you guys soon.